accounting for partnership firm, and this module is about admission of a new partner in the firm. So when a new partner enters in the firm, definitely he or she brings cash in the firm as capital. And at the same time, some changes also take place. And what are those changes? Those changes are relating to the calculation of new profit sharing ratio. Obviously, the profit sharing ratio will be changed. What else? That calculation of goodwill shall be required. We will now calculate the goodwill of the firm. And then we will do its accounting as well. And finally, we will revalue the net assets of the entity. By the way, this revaluation or goodwill is something that we work out because the new coming partner is entering on a specific date and the old partners were sharing for previous so many years. In those previous so many years, the organization has grown up. There is a progress in that organization, based on which that organization has experienced a goodwill. The benefit of that goodwill should go to the old partners because this is their right. The new partner is entering on a day when the entity has already grown up. In the same way, the revaluation gain or loss is something that should be enjoyed or suffered by the old partners. The new partner has no right to claim any gain on revaluation of fixed assets. Because supposedly there was a plot of land in the balance sheet that was presented at its historical cost. Now its value is double of the historical cost. So the increase because of its fair value should be enjoyed by the old partners. The new partner will bring cash in the business today to become partner of that entity in today's position. Okay? So these are the few things that we will work out in our upcoming modules. So what we see in this module is that the admission of a new partner will bring changes in profit distribution, in current account, and obviously in capital accounts. All right? So please be attentive in the upcoming modules for working out all these things. Thank you.